Research and due diligence. You always hear investors saying, make sure you do your own research and due diligence before you invest into any company. They are right when they say this, but how do you do this? In this video, I'm going to go over how I do my research and due diligence. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check me out on my channel. If you like any of the content in this video, please hit that like button. It really helps me out with other people find the video, and subscribe to the channel. My channel is all about making sure people are aware of the different avenues to get a piece of the pie. In this video, we will be covering research and due diligence. With all the stock talk on all the social media platforms and everyone talking about stocks, it's kind of hard to find out who to trust. Who can you put your faith into when it comes to someone saying something is hot or something is about to go to the moon, as so many people say? Well, the most trustworthy person is yourself. Alright, so I'm going to show you guys how I break down my due diligence and research. I break it down into two simple categories. Again, I don't like to overcomplicate anything, because once you overcomplicate things, to me, things become a little tedious. So I keep it simple, and I break it down into two categories, which are ideas and analysis. Pretty simple, right? Ideas and analysis. Let's start with ideas. Ideas are just what it sounds like. Ideas can come from anywhere. Ideas are that first time you actually think of, maybe I should invest in Tesla, or maybe I should invest in Facebook because I think they're going to do good. It can come from yourself, or it can come from other places like Facebook, Reddit. Reddit is underrated if you ask me, because of all the memes and overhypeness and what they did with GameStop. People are looking at Reddit as just a bunch of bullies on stock, but actually Reddit is different from all the other social medias, because Reddit is mainly all about words and making sure you write out your due diligence and actual paragraphs. Other social medias, is all about pictures, videos, things like that. Reddit was made for the people that are more studious, people that are actually more bookwormy, because they don't have to post their face, they don't have to post videos of themselves or their families, and like all the other social media does. So Reddit was really for the bookworms. So some of the detailed due diligence on Reddit and ideas on Reddit are pretty legit, and they're pretty thought out. You can get ideas from your friends, other investors like Warren Buffett, Kathy Woods, Chris Sang, me. You can get ideas from so many places. Just remember, they're ideas. Especially if you didn't think of them, they're ideas that someone else came up with. So Warren Buffett, Kathy Woods, me, Chris Sang, your buddy across the street, they're all grouped into the same category. They're ideas that may be great, but they're not your own. So if something were to go wrong, you would blame whomever you got the idea from, when on all actuality, it was an idea. Could have been a great idea, but you should have done your due diligence and research. At the end of the day, it's all about you. It's all about the investor. So it's all about you making sure that you are comfortable with your investment and you know why. You basically have to make it make sense to you. If it's an investment for the long term, or if it's a quick swing trade, you have to make it make sense for yourself. So the ideas can come from all these wonderful platforms that are talking about stocks, and again, a lot of it is legit information, and everybody has a legit reason why they believe certain stocks are going to go up, certain stocks are going to go down. Everybody has their own formulated ideas. Nothing's set in stone, but when you do your due diligence and research, you will be more confident in what you're doing, and you will know why you stuck with that idea. So now that we discussed where you can get ideas from, now it's time to get down to the analysis. When it comes to analysis for me, again, I told you guys I like to keep it simple. I like to look at 6 things when I do my analysis. To do the analysis, we're going to jump to the computer where it's going to be easier so you can see exactly what I'm looking at. Let's go to the computer. Okay guys, now we're on the computer. The first thing I like to check out on my analysis is the charts. I'm on Robinhood right now. Robinhood is the simplest way to look at a chart, and I want to keep it simplistic. You can do this on your phone. It's just easier for me to do it on the computer. So on the chart, I'm looking at Apple. Alright, Apple. When we look at Apple's chart, what I like to look at is the year. I go to the year first because you can see what your investment will grow in a year, give or take. So in the last year, Apple had a 92% increase over 1 year. That's damn good growth. So the way you want to look at this is, if it did that in 1 year, the following year, it could possibly do the same thing. But again, this is just one thing I like to look at. So I like to see steady growth. Now that is killer growth, that's 92%, but I don't look for that type of growth with every stock. But this is a tech company, and tech companies tend to have this higher growth rate. But typically, if I was looking for another company, I look for at least 10% in a year. If you Google the average growth of a stock in a year, it's 10%. So if a stock hasn't grown 10% over the last year, I'm typically not looking towards that stock. And that's because it's performing at a below average growth rate if it's under 10%. Alright, but that's the first thing I look at. And this is Robinhood's chart. Of course, if you go to somewhere like Webull, like we're gonna go to now, you go to somewhere like Webull, they have more in-depth chart. Like you put the alligator, that's a certain indicator that you can tell what the price is gonna do. Put the alligator up there in the MACD, so you can get a little more in depth with the chart. But I like to keep it simple. The simple Robinhood growth chart would suffice too. But if you want more in depth, go check out Webull. After I analyze the chart to make sure that the company is growing, I then like to check and see what each broker is saying about the company. Is it a buy, hold, or sell? So since we're on Webull right now, I like to see what the analysts on Webull are saying about the stock. So we're looking at Apple still, and as you see, Webull is rating it a buy, some 50% buy, 27% strong buy, and no one's really a few, but no one's really saying sell it. No one's really saying too much hold it. It's more so a buy. So that's a good sign that it's a company that I might want to buy. Webull is saying it's in the buy. Alright, we're not going to stop there. We're going to see what Robinhood says. You go down to Robinhood. Robinhood says it's a 68% buy too. Okay, alright, that's Webull Robinhood. I'm also going to check Charles Schwab. Alright, Charles Schwab is getting it an A rating. And you scroll down, Charles Schwab is also saying that this company is a buy. So that's 3 brokers. I will also check Merrill Edge. I have Merrill Edge too. I'm not going up there right now, but that's the perks of having different brokerage accounts. Even if you don't have a lot of money in each one of them, you just opened it to have have access to their analytical tools. This is the perfect thing to use it for. So I just got from the brokers their rating on it. The broker said buy it. Alright, so that's 3 brokers that said buy it. Chart looks good on growth. Alright, so right now everything is looking like a buy for Apple. The third thing I do is check the projection. I check the projection rate. I do this by simply Googling what's the projection rate for 5 years. Alright, so it's estimating that Apple will have 129% growth in the next 5 years. So if you put $100 in and you waited 5 years, you will have $229. Of course, some people are not going to be investing into certain companies for a whole 5 years. But this is showing you that this company is projected to go higher. And of course, that's what I just look at the first one. You can scroll down and look what a lot of different people are saying about it. If it's going to go up or down, I usually just look at the first one because again, this is just a forecast. There's nothing saying that's definitely going to happen, but it's just a forecast. So if the forecast seems good, the brokers say buy, the chart says is growing, everything is a green light right now for me. Alright, so then after I would find out what a company is projected to do, of course we know Apple, but I would Google the company and get the logistics on the company. What does the company do? Alright, so of course I'm on apple.com. So a company's website, no matter who it is, Google the website and see what the company actually is into. For example, we know Apple has MacBooks, we know Apple has iPads, iPhones, watches, TV, they even got music. They all over the bread like sesame seeds. They out here. So I know what this company is doing, and you have to understand the logistics of the company. So right now, Apple is the easy one. We know all of what Apple does. We definitely know their phones gonna keep selling. We definitely know their computers are gonna keep selling. Their iPads probably keep selling. And their TVs, that might be a new field, but shoot, Apple has the ability to take over whatever they get into. We know their watches took over, and we know iTunes took over the whole game. iTunes killed MP3 players. iPods killed MP3 players. iPods and iPhones. So we know that Apple is a strong company. So the logistics of what Apple does is definitely there. And they always at the forefront of technology. They always have the next big thing first. So it's kind of, the logistics is there. It's a logical bet. The fifth thing I like to check for a company. I jump back to Webull real quick. And this is one of the big things that I like to see too, if a company is profitable. I'm on their income statement and I'm looking at the net income. I'm looking at the net income because that is the real amount that they make a year. So net income. Okay guys, so I'm looking at the net income and those values are in millions. So as we can see, Apple is increasing its income. Had a little fall in 2018 to 19, but we can see that Apple is increasing its income each year. Last year, it increased $74.82 million. So it's increasing its income, and you can see that from the net income. To me, that's one of the biggest numbers that I like to look at. Of course, you can look at a whole lot of other things, the earnings per share, the revenue, but I like to keep it simple for myself. I just look to see if a company is profitable and their net income shows that they're making money. So Apple is checking off all the boxes I like to check. This is Webull, but you can get the net income from a company. You can get the net income for a company just by simply Googling it. And the last thing I like to check. This is the last thing I like to check. I like to check the peers of a company. The peers of a company. Charles Schwab, I'm on Charles Schwab, and they have this tab for peers. And of course, you can Google the peers of a company. But you come down to Apple's competition. You got Apple. You got, of course, they got the S&P index. Of course, Apple is beating the index, which is just the S&P 500. And then its competition with computers is HP. Its competition with cameras, of course, your phones, it got Canon. Apple has a whole lot of different competitors, and Apple is the top dog. Apple is the top dog. as you guys see. And these are all just companies that are in the same field or has a product that Apple has too. So Apple is killing its competitors, but their competitors can also show you what a company should be priced at. So we picking the top dog right now. We picking Apple. Apple is the top dog. But if we were having a company, say for instance, I'm going off this is Apple. Apple is top dog, and Apple does a whole lot of things. But I'm gonna show you guys what I mean by this can be important. I'm gonna search AMD really quick. Okay guys, so now we're looking at AMD. I just wanted to show you guys this. So we picked the top dog with Apple. Apple is killing its competition because they do so much of everything. But then you look at a company like AMD, right? So I'll give it a D, AMD. But AMD is low on the totem pole. But look at what field is in the price of the people above it. All of those prices are higher than AMD right now. So yes, AMD is lower on the totem pole, but in that aspect, this company is lower on the totem pole and has been growing exponentially, and it could possibly catch up to some of these other companies that are pretty high on the totem pole. And because you see their price, you can roughly estimate what AMD could probably be priced at in the near future. That's one of the things to look at too when it comes to peers. But again, it all depends on what company that you are looking at. So those are the 6 things that I like to look at for my due diligence and my research, to keep it simple and straight to the point. That's how I conduct my research when it comes to researching a stock and doing my due diligence on the stock. And again, I'm a long-term investor, so I look for the long haul. I break it down into ideas or analysis, and I go in. So you can get a whole lot of different ideas from social media, from your friend, from the news. But at the end of the day, you have to make sure you go and analyze the companies before you dive into them and just put your money into them. Companies or cryptos, whatever it is that you're planning on investing into, take the idea and go research it. Because at the end of the day, it's all about you. It's all about you having faith in whatever you just invested into. Not has this person told you the right information. It's being able to take the information from someone and then going and making it make sense to you, and you understanding why this is a good company. Because once you understand, all right, I got the idea and I understand why it's a good company, you can pick your own company. You don't have to be reliant upon someone or something to go pick companies. You can pick your own company. I'm all about teaching the person how to fish, opposed to going and getting fish for them, frying it up for them, seasoning it up, cooking it up for them. I'd rather go teach you how to go fish and cook your own fish. Alright, so yeah. If you like any of the content in this video, please hit that like button, subscribe to the page, and come back and see me. I appreciate you guys checking my video out. I got plenty more to talk about. Thanks.